In my over 8 years of trading the stock market and over 5 years of teaching others how to trade the stock market, the main thing I've learned is that the simplest setups are the best ones. Now, it's embarrassing, but if you go back to my old videos, I used to have like 100 different indicators, RSI, MACD, Bollinger Bands, 5 different EMAs, and just so much mess. It looked like I spilt spaghetti on the charts. And the reason why I did that is because I was trying to search for some holy grail combination that would guarantee predicting the future. But what I have learned a long time ago, and embarrassingly enough took me too long, is that that doesn't exist. The most important thing that you can do is just have an edge. So where there's a better, there's a likelihood that you'll be correct, but it's never going to be guaranteed. And then combine that edge with managing your risk properly to get a systematic trading edge. So my strategy nowadays is super simple. I only have one indicator, and that's VWAP. And it doesn't even play a big role into my strategy. I just like kind of having it just to know the context of where the average trader is positioned for psychology purposes. But other than that, I just use simple horizontal levels of support and resistance, and it works because I can keep my system very, very simple. I know exactly what I'm looking for, and I have extreme confidence to take the trade when it actually shows up. So today I have one example that I'm going to show you on a stock that I traded today. It went from about $2 per share from my entry to $3 per share. And so just about $1 per share gain. Very, very, very good. And it's such a repeatable system because if you've been watching my videos, it's the same setup. It's just first green day with news, buying the breakout and retest of pre-market high as new support. It looks the same every time. It's super simple to see. And as long as you can have the discipline to avoid all the other crap out there in the market, then it can be a very lucrative strategy. So we're going to be breaking down exactly how I saw this trade, how I planned it, to hopefully give you some better context to go out there and make your own trading plans next time you do choose to trade, maybe tomorrow. So with that being said, let's jump right into this lesson. Okay, so I kind of lied. I do have a couple more indicators I kind of forgot about, but they're still kind of the same thing. So here's VWAP, obviously. This white line here is actually a script that I found on Thinkorswim that marks off significant previous days VWAPs. So, if there's a big volume day in the past, it marks off that VWAP. Because for me, the most important thing is knowing where traders are positioned. And that's what VWAP does very effectively. And then I also have one more, the daily 200 moving average. I see this as a level of resistance commonly. As we can see, it was the top initially, and then it tried acting as support, and then it broke down. So I have a few more indicators, but most of the time, right, actually planning and executing my trades, it's all just based off of horizontal levels of support and resistance. No Bollinger Bands, no RSI, none of that BS. So in order to break down this system, right, so many people will talk about the news, the float, the fundamentals, and you really don't need any of that. I mean, it does help somewhat in terms of getting the conviction to take the risk on the trade, but like, if I see a chart like this, it doesn't really matter to me if it has news or not. The most important thing that the chart's telling me is that it was able to spike up, right? So we had a spike in pre-market. It set an initial resistance, here in this case about $1.94. It had a significant pullback, which we can clearly see by the many, many, many candles that pulled back. And then at market open, it got a significant surge in volume, spiked back up. So this is the beginning of a trend forming. And in super simple terms, an uptrend usually looks like this, where you have a strength push up, you have a pullback, then you have a breakout. And for the trend to continue, you should see that previous resistance hold as new support and continue. Same thing for a downtrend, right? If you have a downtrend, the stock pulls back on down, has a bounce, but then breaks down, and then you'll commonly see that previous support act as new resistance and continue downwards, right? That's the bare bones of what I'm doing with my strategy. So here we can see the start of a trend. It's not a trend yet because it hasn't broken out, but it's the start of a trend. And so disregard all the news. We're not even going to talk about it because it's not relevant to what's actually going on here. What's important here, and the thing that I liked a lot about XRTX was was the fact that we saw this initially reject that same pre-market line. Now, this is super deep level thinking that I can't fully explain in here. If you want more context, there's a course on my website, tradebuddy.net. We have a free 2-week trial, all that stuff. Check it out if you're interested. But basically, this is super important because we can now see that there's a majority of traders that are respecting that resistance. So just by the virtue that it held that resistance initially, we know that at that point, there was more sellers than buyers. Sellers also mean short sellers, right? And so we now know that if this stock does break out, anyone that did sell is now trapped. That is the essence of this system. That is the essence of the strategy and why it works so well, because it feeds off the fact of sellers being trapped. And if a seller is trapped, right, just say, for example, right, you sell a stock at $2, it breaks out, goes to $2.50. You're now down 50 cents per share. What are you going to do? You're going to panic, right? And if you don't want to lose any more money, you're going to want to buy back in. When's the best point that you can buy back in? If it falls back down to $2 and starts holding, you're going to be like, oh man, it's holding $2. It might go higher. I need to buy back in now. And your buy is influencing it to hold support. And anyone that doesn't buy there and it does break out higher, they're going to have to get squeezed out. And that fuels that short squeeze. It's very simple stuff and people just overcomplicate this, okay? So I really liked how it had that initial resistance there. And then you can see it further broke out. So now we have a trend because once again, the stock spiked up, found the resistance, pulled back, and then it broke out. It went from $1.40 to $2.50 and it broke out over that previous resistance. So now I have my strategy set. And I know that as long as, now here's the key difference, right? I don't know if support's gonna hold. But what I do know is that if previous resistance does hold as new support, everyone that sold is trapped and it's likely going to go higher the longer it holds and consolidates. So from here, I can make my trading plan. And I went into this extensively with the TradeBuddy webinar that we did today. But basically, I made a plan to go long off of $1.98, just this previous resistance. My stop was this low here, so I'm risking 168. And my first target is just the high of day, 240. So in terms of risk reward, I'm risking about 25 cents to make about 50 cents. It's not bad. Not to mention if it can break out and continue to squeeze. And then from there, it's just a matter of being disciplined, being patient. And once again, we go into that extensively in TradeBuddy every single day, knowing how to stay in your trade and all that stuff. But basically, once you have a thesis, as long as that level holds, you don't react to anything in between. Everything in here doesn't matter. As long as it keeps on holding support, you just stick with the trade. Eventually, I was able to get that strength, spiked up. I locked in some profits at 238. I locked in some more into the $3 area. And now just about 40 minutes ago, I did choose to sell the rest because for me, once this broke out, the way that I was seeing it was that if it wants to remain bullish, we need to continue that trend. What does that mean? It needs to hold. Let me just clear up all these levels. It needs to hold the new previous resistance as new support. And I determined that to be 240. So I wanted to see this hold as new support. It couldn't do that. So I sold into 240 and exited the remainder, sold the rest of my position. And that's my strategy. Keep it simple. The main thing is that, you're not going to see this every single day. We did see it 2 days in a row. I did do a webinar yesterday on BOF, which was another one that had this same exact setup. Not exactly pre-market high, but you can see that we did have that previous resistance. Shorts got trapped massively and then it broke out, held new support. I was entering off of $1.27 and we gapped up to 260s and I sold a majority of my profits at 250s and then I sold the rest earlier today into $2. So making about 80 cents per share on average. Pretty good trade. Once again, don't have to be super complicated. You don't need to have an extensive knowledge of indicators and all that stuff. It just makes you confused. The most important thing is having an edge based off of price action, knowing how people are going to react, because at the end of the day, the market is just, stocks and charts are made up of market participants. And if you want to have an edge over people, then you need to know how they're going to react at certain situations. And that's what I teach extensively. That's what I master in. So if you want to see more videos like this, hit the subscribe button. If you have any questions, feel free to drop a comment down below and I'd be happy to reach out to you as soon as I can. And I'll see you in the next video.